one of the things that's amazing, and we just spent, Rob, half of this version of the five things criticizing the US government for its management of the economy, and for it being too large a part of the economy. Well, guess what? That situation is magnified in a place like China, where there really is no private economy, right? The government has a much greater uh, amount of control. And here, in the US, we have an issue with corporatism where our large companies are in bed with the government. And I think that's a problem. That's not great for anybody. But in China, they have SOEs, state-owned enterprises, right? The government doesn't influence these companies, the government controls them. And one of the issues in China, because of this, is the government has told the banks, you will lend, and they've told the property developers, you will build. And these people are all building to try to meet their government quotas. So there's been a huge amount of overbuilding. The Chinese economy has not been great. The economic numbers, just like, I've been complaining about the numbers here in the US, but if you're in China, the numbers there are pretty bad. And by the way, their numbers are faked too. The reality in China is always worse than what they report. So, it's not the US government that has any monopoly on
Right.
bad behavior, bad data, or too much control. But in China, it's worse. And part of that is because their banking sector is over leveraged. Their property developers don't actually have enough money to complete the housing that they've taken deposits for. So, like, try to imagine this. Imagine putting a deposit down for a house. Your builder says, okay, well, we're building the apartment building. You'll have your apartment that you've partially paid for in a couple of years, and then they don't have the money, right? There's no way to recover. And so all of this is crashing property prices in an over leveraged sector. The property the I want to say producers, right? But the builders, they're
Yeah.
over leveraged. The banks are over leveraged. The government is controlling this, and they built a whole bunch of apartments that people can no longer afford. So property prices are plummeting, and the big deal there is property is really the way many Chinese people store their wealth. Just like, here in the US, it's a problem when people see the stock market drop and their 401ks drop or their IRA accounts drop. In China, they store their wealth in property, and so this is a huge problem for them.
With Chinese government control, Gary, and obviously the housing market here in the US, a very popular discussion point quite often. Is there any correlation between what's happening in the Chinese housing market and potentially the American housing market at all?
I don't think so. I think China is oversupplied, um, and going into a weak economy. And again, this is really the way they store wealth. And it's anecdotal, but
Mhm.
Rob, one of the things we see are, Chinese families going into multi-generational debt to buy sons apartments, because
Right.
without that, their marriage prospects are nil and none. And so entire families, parents and grandparents, are going into debt because without it, their sons won't be able to get married. And, one of the things that China had with their one child policy, which lasted for decades, is they have a culture that has a strong preference for sons. And so the Chinese citizens practice sex selective abortions for years and years and years. And so, roughly, the number of marriage age men is about 30% larger than the number of marriage age women in China. And so if you are a Chinese man, 30% of Chinese men have no hope of finding a Chinese wife. They just don't have enough. They don't have enough young women to pair with the men. And so, families are desperately buying property because without that, these men will be part of the 30% that don't get married, don't have kids, will be excluded from having families unless they leave the country. And so that's what's going on there. Here in the US, um, there are people who argue we have too much housing. There are other people who argue we have too little housing. I think we've had, because in the US we have a tendency toward smaller household size, um, we need more households. And so there can be an argument made that we actually should be adding housing units here in the US. But what's really been driving the US property market for years and years have been interest rates. And the Federal Reserve, after the 2008 financial crisis, kept interest rates far too low for far too long. That made housing appear inexpensive. People were seeing huge increases in asset prices. That's typical of economies where interest rates are too low, you end up with asset bubbles. And then what we've seen is we should have seen a decrease in housing prices with higher interest rates over the last couple of years. And the reason that hasn't happened is because no one wants to sell a house and get a 7 or 8% mortgage if they have a 3% mortgage now. And so that's kept properties off the market. So I actually think both countries have issues in the housing sector. They have affordability issues, but I think the drivers on both sides, the societal drivers and the financial drivers, are just very different. And our housing market may be heading the same direction as the Chinese housing market in terms of pricing, but I think it's for different reasons.